Hello, and welcome to this week's show. Thanks so much for joining us today. I'm your host, Trey Winowitz, and you're watching Right on the Money. Our goal for the show is to always equip you, the viewer, with accurate financial information so that you can make educated decisions for both you and your family. We've got a great show lined up for you today, so thanks for watching. We're going to be tackling some difficult financial questions, and we want to take some things that could be somewhat complicated and make them simple and easy to understand. So come on in and have some fun with us.
In the aftermath of Hurricane Katrina, Trey Winowitz was forced to move himself and his family over 600 miles north and begin his financial planning practice again, from scratch. Since then, Winowitz Financial has become a national success story, establishing itself as a trusted source for financial advice in and around East Tennessee. In return, Trey gives back to the community by sponsoring monthly educational workshops and annual charity events. He also hosts a weekly radio show informing and entertaining those in need of financial advice. So, if you'd like to understand more about today's challenging financial environment, if you'd like to overcome your current financial situation, and want to learn from someone with a track record of overcoming, stay tuned for some trusted financial advice that's right on the money.
Now let's get to our main topic, the evolution of retirement plans. Retirement plans have experienced dramatic changes in the last 30 years, and it looks like those plans will continue to change in the months and years ahead. Have you ever wondered why so many employers have made the switch from a defined benefit or a guaranteed pension plan to a defined contribution or 401k plan? Do you really understand the difference between these two types? Are there questions about what retirement plans might look like in the future? If you find yourself searching for answers to questions like these, then you've come to the right place. Stay tuned because you'll be very interested in the important information that I have to share with you on today's show. On today's show, we'll talk about two types of retirement plans that employers offer, how you can benefit from these plans, and how employers can add a defined benefit option to existing plans. Now let's start with the explanation of the two main types of retirement plans that are out there these days. First, we have a traditional retirement plan, or what we think of as pensions, the old-fashioned kind that your parents had. They're also called defined benefit plans. They have a known benefit based on a formula that typically includes years of service and your age. With these plans, there is a known or defined benefit after a period of time, and it's the employer's sole responsibility to provide a benefit so that they are bearing the risk. Next, there are defined contribution plans like your 401k, your 403b, and 457 plans out there.
Bingo!
These are a more recent development in the contemporary workplace, and they are plans which employees contribute and the employer may or may not offer a matching contribution. With the defined contribution plans, the amount of the contribution is known, but the benefit payout is not. This is because in these plans, the employee bears the risk of the outcome. If you don't put enough in or the investments in the stock market don't perform, it's not the employer's fault. In other words, people used to know how much money they could expect to receive when they retired because the plans were structured that way, with guarantees. If you work this long, then your benefit will be this much. Nowadays, retirement plans are much more unpredictable. There are many factors which have influenced this change in how retirement plans work, like declining interest rates, an aging workforce, poor investment returns in the early part of the 21st century. And the result is that companies are choosing to take less risk in what they offer their employees. They're transferring that risk to you, the employee, which means you should probably think about changing your views when it comes to planning for the future. As I said, this is important information we're covering today, so I hope you can stay with us. We have a great show ahead. Stay tuned for more trusted advice that's right on the money.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety. Call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433. Executive Lending Group is a local independently owned mortgage company committed to providing you with high-quality financial services, as well as the lowest rates available in today's market. Chris Holgroff is a mortgage professional who will work with you one-on-one to ensure your mortgage is tailored to meet your specific financial needs. His 12 years of experience in the industry will help you find the right loan program at the lowest rate.
Call me anytime at 865-257-7777. We look forward to working with you.
Thanks so much for joining us. I'm Trey Winowitz, and you're watching Right on the Money. If you're just tuning in, we're talking about the history of retirement plans. And as you begin to plan for your retirement future, I think it's very important to ask yourself if you're looking for I hope so income, or would you prefer to have some I know so income? I'm pretty sure that most of us would answer I know so. That's why pension plans were first created, to reward workers for so many years of service and allow them to continue to live comfortable during their retirement years of their lives. However, at the beginning of this century, things began to change and companies began to switch over to defined contribution plans. Why has this method of retirement planning become so popular? Well, it's more affordable to the companies, but also, according to some research by Georgetown University, the more mobile workforce has embraced the portability of these defined contribution plans. Now, according to statistics, more and more people aren't staying at the same job for their whole lives anymore. So they want to be able to take the benefits with them when they leave one place and go to another place of employment. This is another reason why we do so many 401k rollovers in our office every single week. So things like 401ks and 403bs have come a long way, and you hear about them all the time in today's workplace. And these tools can be good investment vehicles for people who are looking ahead and planning for their retirement. The problem is they may give someone a false sense of security. People think, well, I've got this account through my employer, so I'm all set for retirement, but that may not be true. The Society of Actuaries reports that by age 65, U.S. males in average health have a 40% chance of living to age 85, and females more than a 50% chance. The survivor of a 65-year-old couple is more than 70% likely to reach age 85. Now, in light of these statistics, you have to ask yourself, will my current account provide for everything I need in my retirement years, even if I live more than 20 years after I retire? Now, the report goes on to say, many of us fail to understand the potential consequences of living beyond our planned life expectancy. And many people are not focused on risk management, and making assets last for the rest of their lives is not the highest priority. If these statements describe you, maybe it's time to start readjusting those priorities. So if you're wondering how to do that, I can help. After this next break, I'll tell you about a plan that might work for you. So stay tuned for some more trusted advice that's right on the money.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Thanks again for joining us. I'm Trey Winowitz, and you're watching Right on the Money. Today, we've been talking about wealth accumulation, income protection, and the evolution of retirement plans. First, we talked about how retirement plans have been changing, and then we looked at the major difference between two major types of retirement plans, defined contribution and defined benefit plans. Now I'd like to tell you how you can have the best of both of these plans. If you're currently participating in a defined contribution or 401k plan through your employer, I can help you add a defined benefit option, also known as a pension, to that plan, most of the time without changing a single thing that would affect your 401k. It simply gives you the option of having some of your money in a place that's protected, gaining reasonable and consistent returns so that the money that you put in is also the I know so money, and you know that it'll be there when you need it. And if you're a business owner and you're watching the show today, I can help you too. A lot of times employers are interested in recruiting or maybe help retain the employees that they already have. I can sit down with you personally and show you how you can add a defined benefit option to the existing retirement plan you already have. Most of the time you don't even have to change a thing. Not the way you do your payroll, not your third-party administrator, or even the current company who does your plan. Just give us a call, we can meet for a few minutes and I'll explain everything to you. Believe me, I see folks all the time that are frustrated with losses that they've experienced in the past couple years with their 401k plans. They tell me that they're worried that they may have to work after retirement and they're afraid of outliving their assets if they don't drastically reduce the standard of living that they're used to. But after we sit down with them, we can find ways to make their money work more efficiently and things start to look up. I've helped those people and I'd love to help you too. The bottom line is this: with more and more changes in the financial markets, consider adding some I know so money to your plan. If you or your employer is interested in adding these options, you can have both. In an environment where it's been much harder to make a return, let's see if we can show you how to make your money work harder and make a consistent return. And if you feel like you're always trying to make back the old money you used to have, give me a call. It's probably time to upgrade your strategy to fit today's market. Well, that's all the time we have for the Money Talk segment today. Coming up after the break, we'll learn how people just like you have benefited from a no-cost second opinion. Don't miss our Money Matters segment here at Right on the Money.
I don't know about you, but what's been going on in the U.S. economy, and especially Europe, scares me. There are too many things that we can't control affecting our investments. We have to do our best to educate ourselves about the best options out there to protect our nest egg. The best way to do that is call Winowitz Financial and reserve a seat at their next free educational workshop. There's usually a waiting list for these, so call today to reserve your seat. 691-2433. That's 691-2433.
Are you looking to recruit and retain great employees? Would you like to reduce your retirement plan cost? Now you can offer employees the opportunity to keep their retirement funds protected and growing. Separate yourself from your competition. Make a difference in the retirement of your employees with little to no additional cost to you and no change to your TPA, payroll, or existing 401k company. Call Winowitz Financial today to find out more about this exciting new product.
Now that we're back, I'd like to tell you about some real-life folks that you can relate to. Because it never hurts to have an extra pair of objective eyes take a look at your situation and see what can be improved. But sometimes not getting a second opinion can be very costly to your family. Even if the strategies you're using can't be improved on, people say it's a huge comfort when I tell them that what they're doing is working well for them and they should continue with that plan. However, in some cases they discover that products or strategies that they thought worked a certain way actually don't work that way. So what I want to do is take a second to introduce you to a few people who came in my office recently for that no obligation second opinion, just to be sure. And these folks are glad that they did. If you'd like to be a part of this Money Matters segment, please give us a call at the office and schedule a complimentary review. Now let's take a look at this week's case. Jana, can you bring me my notes? Sure. Thanks. All right, this week's case study comes from Knoxville, Tennessee. We have a 61-year-old engineer working still in Oak Ridge, and his wife is 60, she's still working as a nurse. They had just recently come to one of our weekly educational workshops. Their main concerns, protecting their 401ks. They both had 401ks that were really good from their existing employers, but they had seen a lot of volatility in these and were looking to see if there was a way to help protect those. The other thing is they had a goal to pay off their home in the next 7 to 10 years in the beginning stages of their retirement. And also they wondered when it was the best time to take their Social Security. So with all of these things, here were our steps to success. We sat down with them and first we researched their 401k plans, looked at all of the existing options, and then we also looked at some of the rules. We compiled all their information on their existing mortgage loan and introduced them to our in-house mortgage professional to see if there was any other better options to help them pay that off sooner. Lastly, we analyzed with them, and we called Social Security, analyzed their Social Security benefits, and tried to formulate a plan to see if we could maximize those benefits for their family. The results. We actually discovered, and in most cases this is the case for a lot of folks that come in, there were in-service distributions allowed. What that is some employers' plans, 401ks, will allow you to roll over your 401k while you're still working. So we actually were able to do this with this couple and help find some safer, more protected alternatives with no fees so that they wouldn't lose any money while they were still working. Secondly, we shared with them a strategy on their mortgage, learned from our mortgage professional. We were able to refinance and actually pay their home off 3 years sooner. So that was a big help in improving their retirement plans. And lastly, we came up with a strategy to help them maximize Social Security benefits by postponing their benefits a couple of more years so that they could get more money for the future for the rest of their lives. Give us a call today for a complimentary review, and if your scenario gets picked for the show, you're going to receive a Right on the Money prize pack. But most of all, we want to help you. Coming up next, another opportunity for you to be a part of the show. Post it on our Facebook, tweet us, or email us your financial questions, and stick around for the viewer mail section.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
Welcome back to Right on the Money. I'm your host, Trey Winowitz, and it's time for you, the viewer, to be an integral part of this show, Viewer Mail. This is the part of the show where you send us your questions about anything financial. In order to get your questions to me, you can post them on our Facebook page, tweet your question to me at TreyWTV, or email them to me at advice@TreyWTV. If your question happens to get answered for the show, you'll receive a Right on the Money prize pack just for your willingness to help out our other viewers. This package has a retail value of over $50, so please don't stop sending us those questions. Our first viewer mail question today is, I'm 63 years old and my bank is pushing me to buy a variable annuity since I told them I wanted to get out of the volatility of the stock market. It sounds pretty safe. What should I do, and is there anything that they're not telling me? Well, unfortunately, when people come into the office with annuities that they've purchased from other advisors or banks, a lot of times there's quite a bit of information either left out or not really explained thoroughly. In instances like yours, I'd say it's best to go in and meet with an independent advisor. If you were to come into my office, I'd take a look at your contract and then spend some time with you making sure that we knew the benefits of the contract compared to the cost of the account. More often than not, these type of accounts and the fees associated with them outweigh any perception of benefits. I would go through our annuity fee sheet with you while we were on the phone with the insurance company. That way we could determine if the suitability of that product fit with what your goals were. That's a great question, and I'd love to help you with that. Also, just for sending in that question, give me a call at the office and I'll send you a free copy of a DVD of our show on annuities. It details all the different options just to help you. Thanks for that Facebook post. And our next question is, what's a good plan for someone whose job doesn't take money out for retirement? Well, there are a lot of different retirement plans. Depending on what your business is, how much money it makes, and how much money you take out of it, etc. For you, I would say I'd be focused on finding one of these with very low cost or no fees for administration. This would allow you to focus on your highest rate of return, which would be growing your business. Depending on your risk tolerance, there's a lot of different platforms that you could look at. But you want to make sure that you're always picking one that fits with what you want and not what the advisor wants. A lot of times, small business owners can set up what's called a simple IRA plan. Traditionally, this lets them put as much money as necessary, especially if it's a fairly new business. Then, once you choose the retirement plan type, you can work together to find the appropriate investments to go inside of this plan. Give me a call at the office. In a short meeting, we can walk you through all of the options, and we can also talk about some great accounts with no fees. Thanks a lot for that question. The last question we have time for today is this. I have an extra $100. Should I put it into my 401k or save for my kids' college? You know, I think the answer to this question depends on a few factors. Does your employer have a match to your 401k? Do you already have an ample emergency fund established? And how old are your children? I'm a huge advocate for helping out your kids as much as possible, and I think we all want our kids to have more than we did. However, from a financial perspective, I don't want you to do things now that'll put you in a position that you'll have to work forever. I would encourage you to come in, sit down, and let's talk about your specific situation. We can work through the problem together and find a solution that's best for you.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Concerning the stock market and other things, they tell us that those who don't know history are doomed to what?
Failure.
Failure? Very good. Or repeating history? Very good. In the stock market, the experts tell us to buy low and sell high. Very good. A very famous person said one time, a penny saved is a penny. Do you remember who said that?
Benjamin Franklin.
Right on the money. That's a very famous person said, a penny saved is a penny
Earned.
Do you remember? Benjamin Franklin. Very good.
Look at you.
Yes. A good personal friend of mine. He's actually a gambler. His name's Kenny Rogers.
Yes.
He told me that you have to know when to hold them and know when to what?
Fold them.
Also, know when to walk away and know when to
Play. Stay. Run.
run. Run.
Run.
Got a little help from the
Got a
audience
little
there.
help.
That's
All
good.
right.
That's awesome.
Okay.
Those who don't know history are doomed to what?
Repeat it.
Repeat it. Very good. Okay. And these have all been kind of financial rules of thumb. Best guess, I mean, how many rules of thumb do you think someone should use to live by?
Probably just one, the golden rule.
Okay, I like that. One or two would have been the correct answer because we only got two hands, but the golden rule is a good one. In order to be an investor, you have to be in it for the long haul. See, you guys know all this. Yeah, long haul, long run. And diversification. You ever heard of diversification?
I have.
Okay. What do you know about it?
That you should spread your money around in your investments.
Okay. And how does that help you?
It helps you because some are high risk and some are low risk, so you have a almost guaranteed payback, and others are a higher risk. You may or may not lose much payback.
Okay. So rule of thumb says diversification equals what?
Distribution.
Okay. How about the Beatles? The Beatles said,
I like them better.
Yeah. I don't care too much for money. Money can buy me love. You knew that one. All right. And in order to make money in the stock market, the experts tell us that we have to be in it for the
Long haul.
long haul. Are you in it for the long haul?
Yes.
You've been retired for a little while though.
Yeah, 7 years.
Awesome. Very good. Are you getting good at it?
Yes.
The Kenny Rogers song, The Gambler, right? You got to know when to hold them, know when to
Hold 'em.
right? Next part says you have to know when to walk away and know when to
Run.
run.
back. This is Right on the Money, and I'm Trey Winowitz. We're just getting ready to wrap up the show, but before we go, I'd like to tell you about an old Louisiana tradition called lagniappe. Lagniappe means to give someone a little something extra, and the way that we want to do that here at Right on the Money is to brighten your day at the end of our show. So with that, here's a little lagniappe for you. 3 guys decide to play a round of golf. One's a priest, one's a psychologist, and one's an economist. They get behind a very slow twosome who, despite their caddy, are taking all day to line up their shots and 4-putting every green. By the 8th hole, the 3 men are complaining loudly about the slow play ahead, swearing up and down and on a blue streak. The priest says, "Holy Mary, I pray that they should take some lessons before they play again." The psychologist says, "Man, I swear, there's people that play like, I didn't know there's people that play golf so slowly." The economist says, "Man, I really didn't expect to spend this much time playing a round of golf." By the 9th hole, they've had it with the slow play. So the psychologist goes up to the caddy and demands that they're allowed to play through. Caddy says, "Okay," but then he explains to him that the 2 golfers are both blind, retired firemen who lost their eyesight saving people in a fire, and that's why they're playing so slow. Also, he says, "Look, could you please not swear or complain so loud?" The priest was mortified. He says, "Hey, I'm a man of the cloth. I've been swearing at the slow play of 2 blind men." The psychologist was mortified. He says, "Here I am trained to help others with their problems, and I've been complaining about the slow play of 2 blind guys." And the economist ponders for a moment and thinks about it. Then he finally goes back to the caddy and says this, "Listen, next time, couldn't you just let the guys play at night?" And that, my friends, is your little lagniappe for today. That's pretty terrible. I want to personally thank you for watching our show today. I hope you found our show helpful as well as a little bit entertaining. If there's anything at all I can help you with financially, please don't hesitate to call our office. And remember, any plan that we come up with will always have 3 main goals for your money. Safety first, or protection of your principal, is always number 1. Making a reasonable return on your money in what some would consider an unreasonable market. And number 3, keeping your plans simple and easy to understand. If that sounds like something you want, I know I can help you. Also, please keep the financial questions coming. We'll do our best to get them answered on the show. I'll see you next week at 3 o'clock for more trusted advice that's right on the money.